People sometimes ask me, do you ever see in the future that we might go to war over copper or nickel? And it's like, man, we went to war over bananas. I sure hope not. We're ending an era, I believe, geopolitically right now. I mean, my entire life has been defined by the era of globalization, where more countries were sharing more of their resources. And at the global level, if you had the cash or credit, you could buy whatever raw materials you needed from the global market. That was the globalization movement. And that era is definitely over. Canada has the potential to be the wealthiest country in the world on a per capita basis, but you have to play to your strengths if you want to realize that potential.
Welcome to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining Guy over on X and the host of this conversation, of course. And I'm looking forward to welcoming Jay Martin. We usually jump on with Jay once a year. He's the host of the Vancouver Resource Investment Conference and, of course, the host of the Jay Martin Show. So he's a friendly competitor, I'd say. It's fun. Like, I love chatting with Jay. He's a great guy. Lots of insights. I love his show on YouTube as well, because he explores roughly the same topics that we explore here at Soar Financially. We look at geopolitics, macroeconomics, and we're trying to understand how it impacts the resource space. At least that's we're trying to understand what is shaping the world, what is impacting the resource space. So that's where we come from. Jay hosts one of the best and largest resource investment conferences in North America, and I'm excited to be a keynote speaker there as well. So I'm really looking forward to it, and I'm looking forward to hosting Jay here on this channel today because we got lots to talk about. We really want to explore the topics that he set out for his conference this year and to what it means for the resource space. So we'll try to connect it all. Lots to chew through. But before I switch over to Jay, hit that like and subscribe button. It's a free way to support our channel, and we tremendously appreciate it. Now, Jay, it is great to have you on the program. It's good to chat. How are you?
Hey, I'm really good, Kai. It's great to see you.
Yeah, I've seen you grown some hair. Is that going to come off this year?
I don't know. You know what's so funny, Kai, is every time I grow my hair out, my comments in the YouTube channel, people get very offended. And they're like, man, I thought Jay was bald. I feel like I've just been cheated on. What's going on here?
That's hilarious. I've grown it out as well, as you can tell, probably. So,
no, great, man.
No. Jay, really appreciate you joining us here, and thanks so much for having me as a keynote at your conference. I always love the conversations there. A lot of repeat customers at the workshops, which is great. So you get to reconnect with a lot of investors that attend the event. But let's dive into our conversation here. We have lots to chew through, and if you were to choose one topic, if you could only discuss one topic at VRIC this year, what would it be, Jay?
If it were up to me, it would be geopolitics. That's where my heart lies in terms of the content I really love diving into. I also feel that geopolitics matters more today for commodity investors than it ever has. And so we cover that to a greater extent at this year's conference than you would have ever seen, in the last 15 years. And partially that's because, we're ending an era, I believe, geopolitically right now. I mean, my entire life has been defined by the era of globalization, where more countries were sharing more of their resources. And at the global level, if you had the cash or credit, you could buy whatever raw materials you needed from the global market. That was the globalization movement. And that era is definitely over. And we don't know necessarily what's going to happen next. It's not going to be simple or quick or predictable, but we've definitely closed the chapter on that era. And you see the evidence all over the world, a massive reshuffling of the geopolitical chessboard. And as a consequence, countries are not sharing the resources like they used to. They're being a lot more strategic and disciplined with who they strike trade deals with. And so that dictates the price of commodities to a very large degree, because if you can determine predictable supply of something, that thing is not scarce. And so the price will fall. But if you're uncertain about where you're going to source your nickel, your copper, your oil, you're willing to pay a lot more to secure that product. And that's why we see a lot of prices rise. And so geopolitics is playing a bigger factor this year than I've ever seen it. Coincidentally, I love looking at the world through this lens. And so we're covering that extensively at this event.
Yeah, absolutely. I've noticed that keynote speakers, Dr. Pippa Malbger and Colonel Douglas McGregor, just in the top row of the speakers announced. Absolutely, really looking forward to catching up with them as well. I think we have an interview scheduled with Colonel Douglas McGregor as well. Somebody I haven't interviewed yet. I've always speak with Simon Hunt, of course, but we haven't had a chance to catch up with the Colonel. So I'm really looking forward to that as well. Geopolitics is an interesting topic. Of course, if you look at wars and things that how they are impacting markets. But even just from the resource side as well, Canada is resource rich, but cash poor, it seems like right now. Like I've listened to quite a few conversations with Poilievre or Jordan Peterson the other day just to catch up what the latest is in Canadian politics. How do you see geopolitics connected, especially with Canada right now? Like, what's Canada's place in the world right now when it comes to the resource space?
Yeah, Canada's place is the same place it's always been. We have products. That's what Canada has in abundance. Despite 10 years of federal regulation that's very much hamstrung our natural resource industry, we're still in the top 5 global producers of uranium, of gas, of oil, of lithium, of nickel, of zinc, of gold. Canada provides 25% of the world's softwood lumber, 30% of the world's potash. If you're a country that wants to grow food, you need potash. It's a critical fertilizer, and we have deep water ports in 3 different oceans. We share the largest international land border, on the other side of which is the world's wealthiest and hungriest customer. Like, Canada has products and we have direct lines to the consumers, but we need federal regulation that supports that. I mean, truly what Canada needs in the leadership seat is somebody who understands their role is to be a deal maker. And what that really means is just clear the path for the provinces to conduct business as they see fit. But we've right now got a lot of federal creep into these provinces, and so the opposite is happening. Canada's got a lot of leverage. It's a colossal country, right? I mean, this is a landmass that's bigger than the United States with the same amount of people as California. So it's gigantic, and there's almost nobody here. But the natural wealth that exists beneath the core means that Canada has the potential to be the wealthiest country in the world on a per capita basis. But you have to play to your strengths if you want to realize that potential. And we have not been. We've had a leadership who's been shutting down natural gas deals when Germany and Japan show up at our doorstep offering to pay distressed prices for a natural resource that we have in abundance because they need it that bad. And our leader says they can't make a business case for it and instead proposes hydrogen power, of which we don't produce any. The same leader who decides to subsidize electric vehicle manufacturing in Canada. That's not what Canada is known for. We do a few things extraordinarily well. We produce natural resources that the world needs. But if we don't play to those strengths, it doesn't matter. I mean, Canada today, given how we are positioned in this world with the natural wealth that we have and the lines to consumers that exist, we're like the mid-90s Chicago Bulls. But Justin Trudeau is like the coach walking in the locker room and saying, look, I know you guys are really good at basketball, but turns out in Europe, soccer is huge. So you're now a soccer team, right? Football for my Europeans. And the players go, look, no, we're a basketball team. We're really good at basketball. And the coach says, no. Soccer is huge in Europe. We're going to be a soccer team now, right? That's what's occurring right now in Canada. That is the analogy. And we need a massive change in leadership, not just a swap of the leader of the existing party. We need administration change to wipe the slate clean. Canada came through the 2008 financial crisis with a healthier balance sheet than any other G7 nation. And that's because of how we leveraged our natural resources. We can do it, right? It's absolutely possible, but elections matter, leadership matters. And that's why Canada today is making headlines all around the world, which never happens. But right now, everybody wants to talk about Canada for more reasons that I discussed. Obviously, the rhetoric coming from our southern neighbor, which we can get into, that'd be fun. But that's my stance today.
Yeah, no, absolutely. No, you hit the nail on the head there. It's like it's resource rich, but policy poor. I don't know. That might be the good headline here, right? Yeah. Is Canada still a tier 1 mining jurisdiction, Jay?
I think it can be. Again, but we need federal leadership who understands their role is to clear bureaucracy and fast track projects. I think it hasn't been a phenomenal location because of over-regulation, but there's risk in any jurisdiction, right? You look at a lot of the jurisdictions that lack over-regulated industries, what you end up with is weird political risk, and so Canada is frustrating to do business, but at present it's predictable. So there's a pro and a con there. We have the potential, Kai, and inevitably we'll get there, right? Economics will drive the future of this country. I believe that, and we're the world's #1 uranium producer. We have a product that the entire world is now positioning to accept. We will find a way to get that to market. But, you you can regulate a phenomenally positioned country into, so if you go back to the beginning of the 20th century, there was a country, one of the wealthiest in the world, and their wealth was largely built through very intelligent immigration and a very strong commodity export industry. That country was Argentina, right? And all over the world, the term the wealthy Argentinian was known because it was such a wealthy country. It's like the wealthy American today. Now, they got hit very hard during the Great Depression, and they didn't recover like so many countries did. Instead, they went full populist and then voted socialist and spent the next 90 years bouncing between socialist and military rule. Now, they are just today getting their feet back under them, but that was a 90-year loss of productivity that occurred in a country that had all of the right ingredients, very similar to Canada. They had it all going on. All the inputs were in place, but poor policy cost them a century of productivity. By 1989, inflation had hit 3,000% in Argentina. Now, I use that example because that can happen to a country who has all the right ingredients. We saw it happen recently. Now they're getting their feet back under them. If you had invested in Argentina on the day that Milei was elected, that was a great bet. But that took a century to get there. So, Canada has the potential, but nothing is assured.
Yeah. When is conservative leadership taking over in Canada? What day should we mark in the calendars to buy some stock?
Right. Man, I hope you're right.
No, it's like Justin Trudeau said he'd step down, but he threw everybody a curveball by saying, hold on, I'll step down once we find a replacement. Let's put government on hold. It seems like Canada is just in limbo right now, waiting till the end of March, I think it is, to get anything done.
Yeah.
How is that affecting our space? How is that affecting Canadians? What's the mood in Canada right now? Maybe that's a good question to ask here, Jay.
We're leaderless right now. That's what Canada is. And that's why you're seeing so many attack vectors land on Canada right now. The parallel that people should draw from this, because when Trudeau resigned, a lot of people that did not like him celebrated and they thought, finally, he's gone. But that's not really what happened. This is the exact same as directly after President-elect Trump debated President Biden. And you remember that debate. Trump won by a landslide, and the Democrats freaked out and thought, we can't run this guy. He has no chance of winning. And so they did the hot swap. They put the new branding spin on Kamala Harris and ran her instead. Now, obviously it didn't work, but I think it's fair to say that she did present a bigger threat to Trump than Biden would have. That's all that's happened in Canada. The Liberal Party has read the polls. They've read public sentiment. They understand that Trudeau will not defeat anybody if he's run again. And so they've done the hot swap. They're choosing the next jockey they'll put up front. It's probably going to be Mark Carney. And just the same, Mark Carney presents a much greater threat to the Conservative Party and Pierre Poilievre than Trudeau did. Doesn't mean he's going to beat him, but he's a much greater threat. So Trudeau resigning actually strengthens the Liberal Party's chances in the next election. Canada, I love this country and I love the people in it, and they're tough, durable, creative individuals. It's generally speaking just a more liberal country than the United States. And so given the opportunity to vote for a responsible liberal, that's a compelling choice for a lot of Canadians. That, what I want to tell people who are trying to make this decision is that Mark Carney was the former Bank of Canada, and he took that seat in 2008 and stayed until 2013. And a lot of what you're going to hear is that he was the individual who steered Canada through the great financial crisis. We did skate through the 2008 great financial crisis, but it's not because of what we did from 2008 to 2013. It's because of what we did from 2005 to 2008. It's what you do in front of the crisis that determines how you migrate through it, not what you do afterwards. We had very competent leadership in the years preceding, and that's how we were set up with an incredibly healthy balance sheet, a robust export economy, and we got through for those reasons. But people who are celebrating the resignation of Trudeau, I get it. And I celebrate alongside you, but don't take too much for granted because this is just the beginning of the story.
Yeah, no, absolutely. It hasn't unraveled fully yet. The question is now, how is it going to impact our portfolios, Jay? Positively, negatively? What do you expect the outcome to be for us as resource investors?
Well, I think if you look at net investment into the United States since Trump's election, what you'll see is the world recognized a strong leader coming to power, and inflows into the US are breaking records right now and surpassing every other country in the world by a landslide. And not just because it's the United States, we're breaking sort of norms over the last 10, 15 years here. That event, and just the same, if you had invested in Argentina on the day Milei was elected, it ended up being a great decision. And so if we get the right leader in power in Canada that sends a message to the world saying, we are now under prudent financial management, we are now going to operate according to our strengths as a country and start contributing meaningfully to the global economy, and no longer pretending to be something that we're not by creating these fallacy narratives into industries that Canada does not excel. We're going to get back to what we're really good at. We're going to contribute. And that's the message that the world needs to see. That's going to benefit all Canadian listed companies because of the perception of Canada at the global level. And capital will return, but only when the globe has confidence in our leadership moving forward. Me too, to be honest. Yeah.
Yeah, no, absolutely. I think we'll have to wait a little bit longer, at least until the mid-spring to see where we're at. And if Mark Carney's the solution or not, we shall find out. Right. You touched on a topic, and a flow of funds into the U.S. Was an interesting one because I picked up on that. I saw the de-dollarization topic. The de-dollarization is accelerating as a topic you mentioned on your website. And but you just mentioned the flow of funds into the U.S. I'm just looking at the Dixie here as well at 109, showing considerable strength versus other currencies right now. How true is that statement still? Is that de-dollarization accelerating, or is it just a flight to safety right now?
Yeah, it's such a good question. And so, yeah, it's been a core thematic on my podcast for the last year, I'm sure on yours. And so to cover this, I invited a few individuals who obsess over this topic like it's their full-time job. Individuals like Frank Giustra, Andy Scheckman, Grant Williams, and they're going to get into it because I think Trump is, often the American president doesn't matter that much in terms of global trajectory. I mean, that was the beauty of the US Constitution, is that it limits the power of any one individual. There's certain moments in history where that doesn't apply or where it's a bit different. And I do believe right now we're at one of those moments where the individual in the presidency is actually impacting perception of the United States and global trends in a major way. A lot of what he says from the podium is noise, right? Not much of it's signal, but we should know this by now, right? That's his negotiating tactic. When he's come out and said he's going to tariff all the BRICS countries into oblivion, listen to what he's saying there, but also try to get to the signal, right? When President Trump was elected the first time in 2016, I read his book, The Art of the Deal, which he published in like 1987, because I wanted to understand who this guy was. All I really knew about him was what I'd seen on TV. And so I read his book, and his negotiating strategy has not changed at all. In the book, he's like, when you walk into the boardroom, you want to start by saying something crazy and throw everybody off balance, but you'll get their attention. And then when you slide in your actual demands, they're so moderate to where you started, you end up getting everything you want. And so the rhetoric towards BRICS is the same as the rhetoric towards Canada. He doesn't want Canada to be a 51st state. He just wants better deals on our oil and gas. And there's a trade negotiation coming up with a new Canadian leader. He doesn't actually want to buy Greenland. He just wants access to the critical metals within Greenland. And just as importantly, he doesn't want Russia and China to access those, right? He's not going to take over the Panama Canal. He just wants better deals on the fees U.S. freight pays to move through the canal. And I think BRICS are the exact same rhetoric. So, non-US dollar trade does occur. It is a small percentage on the margin. The question we're going to be driving into at this conference is what's the trend? Because as you know, events happen every day, and we often look at them like this thing that occurred, Saudis and Russia did an oil deal. That happened. But more importantly, is that part of a trajectory? Is that deal likely to open up a bit of a door? And are we going to see more of that in the future? And that's what we'll be diving into here, is taking a critical look at what's actually occurring in terms of non-US dollar trade, who's trading and what's the trajectory of those deals. And then we have a panel called Will BRICS Survive a Trump Presidency? And that's exactly what we're going to get into, is how much of an impact will this president have on that organization, who is largely, assembled to just provide counterbalance to US hegemony. But the members themselves inevitably will face tremendous challenges because they're culturally different, they're ideologically different, right? They have different intentions and motivations for their country. They're aligned in their non-US dollar motives, but outside of that, they're very different countries and cultures and ideologies. So, it's that'll be a core focus for this year's event for sure.
Absolutely. Are you live streaming the inauguration ceremony at the conference?
We'll see how it goes. No, we're not. We'll
No, it's a big event on the Monday. It's almost competing with the Vancouver Resource Investment Conference here, right?
Yeah.
As you said, it's an interesting moment in time. A lot of people are looking forward to it. The expectation is that he'll put a lot of what's it called? Like he can sign emergency acts quickly and wants to enact a lot of things quickly. So people are probably glued to the screen watching what he's going to do first. So it'd be interesting. It'll be cinematic. Somebody mentioned on my show, like, let's get some popcorn and just watch from the sidelines.
Yeah.
Right?
Yeah.
Absolutely.
I agree.
No. Jay, I mentioned to you before hitting the record button here that I do see a connection between the Fed and the junior mining space or the resource sector in general. I'm curious what your thoughts are on that topic. I gave you a bit of background earlier. It's like, because when I saw in March 2022 that the Fed started raising rates, our Inc. index plummeted. Financings were difficult to obtain, especially for small companies. And all of a sudden, come September last year, 2024, the Fed cuts rates, and there's euphoria in the market, which you can track just by looking at the volumes on the venture, for example. Like, what are your thoughts? Do you see a connection there as well? I'm just fishing for some information for my keynote here, Jay.
Yeah. I mean, my honest opinion, Kai, is that we're very good at making sense of those events in hindsight. They're near impossible to predict in the future. And so when I look at the mining equities, like, my base case is sort of this simple. I look at it the same as any other investment trend that's occurred. And I just make the assumption that human nature and investor behavior has not changed much in the last 50 years. And what I mean is that whenever an investment idea comes to favor, you always see one pillar idea or core company lead the way, and investors pile into that idea or business and run the price up. And then what happens is they begin looking for the what's next opportunities. And one of the most polarizing examples of this is obviously the Bitcoin rally. Every 4 years, Bitcoin runs, and all of the maybe I'm next opportunities start bidding up in price as investors look for the what's next opportunity. We saw the same thing with the AI cycle. We've seen it countless times in every investment trend as it appears to the market. And every mining cycle has occurred exactly the same way. The core idea or pillar, in this case, the physical price of gold, begins to run. Investors start bidding it up, and eventually they look for the what's next opportunity. And that's how we're seeing a lot of producers now at 52-week highs. They're the next down the risk spectrum, and investors are piling into those, not at the numbers that they will, but it's beginning. And as that what's next opportunistic investor begins moving further down the food chain to find the next thing, we'll see capital begin to flush out a bit more into the developers and eventually the explorers. Now, my ability to time that cycle does not exist. I wish I could. If so, I'd be retired. But what I can say is that that's a cycle that's repeated, not just in mining, but in every single investment trend that you can find. One pillar idea or company leads the way, and then investors look for the what's next opportunity. That will happen again in precious metals. We're seeing the early stages of it now. The physicals run, the producers are next, and they are moving to 52-week highs. But what's next is the smaller companies further down the food chain, timing that's near impossible. And I wish I could pull data or expectations from Fed activity and come to you with like a concrete thesis. But as I mentioned, I think we're very good at doing that in hindsight, but forecasting that into the future, we're deadly inaccurate. Yeah, so I try not to.
Yeah, no, a lot of it is also personally is based on gut feel, quite honestly. And then the data, you can look at some volumes and stuff, but as you said, it's lagging indicators, not leading indicators.
Well,
right?
when you're so in this industry, right? Like I am, you live and breathe this. And so like when you say gut feel, I trust you because you may have indicators that you're paying attention to, but I know there's ones that I feel like there's ones that I'm not necessarily able to identify or measure, but they hit me, right? Whether through conversations I'm having with promoters, brokers, investors, money managers, entrepreneurs, and just gauging sentiment, which is such a driver, right? Such a driver. And so that intuition, if you live and breathe the industry, I do think very much exists.
Yeah, no, absolutely. One of the topics you mentioned is decade of underinvestment, and Rick Rule as a counterpoint says the industry or the sector's overfunded. Where do you stand on that topic, Jay?
Well, that's such a good question. Let's look at like maybe copper to use that example. So when people talk about copper forecast, they'll usually point to one of two things. They'll talk about technology innovation, in this case, AI infrastructure, renewable energy, EVs. This is all coming down the pipe, and that's why we see forecasts of copper demand doubling in the next 10 years, right? And the counterpoint to that would be, yes, but the global economy is on rocky footing, and we're probably heading towards some sort of a globally coordinated recession, in which case demand will melt away. Now, which of those two things is going to happen? I don't know. What we can do, again, back to I prefer to look at history. We can look at the last 50 years of copper supply and demand, and that'll tell me everything I need to know. And if we go back to 1970, what we'll see is that we consumed 4 to 6 million metric tons of copper. And in 1980, it was like 5 to 8. And in 1990, it was another sort of 3 to 4 million metric tons. In 2000, another 3 to 4 million metric tons. We've increased our copper demand incredibly consistently, decade over decade, by about 3 to 4 million metric tons. Now, why does that matter? That's a 50-year track record we could look at. And that matters because when we talk about the future and we talk about booming demand, we're going to double copper demand because of these new technologies, or a globally coordinated recession that will crush demand. All of that stuff, we saw that in the last 50 years. We saw massive technological disruption, the dawn of the internet. I mean, personal computers, smart devices, cell phones, all of this stuff occurred in that time period, but we never saw this crazy doubling of demand. It never happened. It was remarkably consistent, volatile interdecade, but decade over decade, we maintained that trajectory. We also saw tremendous recessions, obviously, right? 87, dot-com bust, 2008 GFC. We saw that too. So we saw the surprises to the upside and the downside. Trajectory was consistent. So for me, I'm like, that's what I expect in the future. I don't expect a doubling. I don't expect some, catabolic event up or down. I expect a continuum of the last 50 years. That gives me confidence. But the important part to note about this is that in 1970, we needed 4 to 6 million metric tons. That's what we produced. All right. In 1980, we needed 3 to 4 million metric tons more. We produced the equivalent amount. Our supply and demand were directly in step in 1970, 1980, 1990, 2000, 2010. We were able to produce exactly what we needed until you get to 2010. And then what you'll see is the demand continues on that 3 million metric tons per decade, but production doesn't. It flatlines at 19 million metric tons in like 2012 and doesn't move. And so this gap begins to open up as demand is kind of baked in the cake. But we stopped investing in production, and you need to do that, right? And if you don't, you will run out. And now we're running out. We don't have a quick fix here. And that is like a very polarizing example of what happens when you starve an industry of capital. You just stop producing what that industry creates, in this case, copper. So we've never had this deficit before. We've always met demand right on the nose until, a decade of underinvestment, investors attracted to FANG stocks and the innovative boom on the NASDAQ. And these companies got no love at all from investors. And so a decade, 15 years of underinvestment has now created this event where we're going to see an increasing shortage of copper every 5-10 years, very predictably, because we know our mine depletion rates, we know our demand forecast. And so that gap is just going to continue to widen moving forward. And that's a direct impact of underinvestment in new supply.
Yeah. No, that makes sense. Like, I think there are two different conversations happening at the same time. The overfunding, meaning it's going to the wrong companies, and the underfunding is we're not financing the right commodities that we actually need, and the money's not flowing in the right direction, right? I think Rick is coming more from the corporate side, while you're looking more at the commodity side, I think.
Yeah. So, okay, that's a good point. Yeah. What Rick is saying is that there's way too many companies able to raise money that really don't have a good shot at finding or delivering any value to shareholders. Yeah. It's a tough one, right? Like, I don't know, to be honest, where I lie on that. I mean, factually, he's right? There's more companies getting financed than there needs to be in terms of where we find the resources. But we don't have I don't believe we have a better strategy right now. Finding mineral deposits is really, really hard. And it takes a lot of companies out there kicking rocks, drilling holes, doing sampling to find these deposits. And until we have a better technology to discover mineralization, I just don't know if there's a more efficient way to find economic resources. I think there will be, but today I don't know if there is. I don't know if there is. I mean, as you know, the innovation in the mining sector hasn't really changed in like 100 years. The drills spin a bit faster than they used to, but that's really it. We're still doing the same things. We're going out there with rock hammers, taking soil samples, drilling holes to see what's down there. And we get the core out, that's when we find out, right? And that's a very cost-intensive process, especially since we can't see what's beneath the surface with any consistency or predictability. So Rick's right, but I just don't know if there's a better solution at this moment.
Yeah, it's a good point. Like there will always be bad apples when there's money involved. There'll always be bad apples. You can't like not even necessarily bad apples, but inefficiencies maybe.
Inefficiencies and bad apples, absolutely. I mean, there's lots of cowboys in the market, right? Always. And in a hot market, there's more. And so if the market's been tough for the last 2 years, a lot of the easy money opportunists are gone. And I think the industry is a lot healthier today. We were chatting before we hit record about the churn that we've seen in this industry over the last year. A lot of companies flat out were not able to raise cash, but a lot of new companies were. And that's like a top grading of quality. Cash is the most important resource in the resource business, not the rocks. Like these exploration businesses live and die on their capital raising ability. And if they run out, they're out of business. I mean, they'll raise a bunch of money and their only promise is that they'll spend it all in the ground exploring. And hopefully they find something and come back to the market with a more promising opportunity. If they don't, or if they run out of their ability to raise capital, that's it for them. It's curtains.
Do you see when you say new deals, like what commodity are they focused on? Like, is there a trend?
There's not one that I see. I mean, at this year's Vancouver Resource Investment Conference, you're going to see a handful of silver, copper, gold companies. You won't see as many new uranium companies as I might have thought you would. And honestly, I think that's just fine because I don't know that we need a bunch more uranium explorers right now. Some consolidation in that sector is probably smart, but no, we'll see equal parts as far as like off the top of my head, equal parts, new companies listed that are exploring or developing a resource of some kind in copper, silver, and gold.
No. Usually you have companies like the lithium explorers or helium or something exotic that there's always that one trend. Every conference, there's one trend. Maybe it's germanium this year. Like I've been seeing quite a few germanium headlines last couple of days. So I'm just, it's always interesting. But if you were to say, like roughly speaking, you mentioned to me 173 booths, 200 companies roughly presenting. If you were to cut that down by commodity, like I have an assumption what it will be, what it would look like, but I'm curious, like if you were to give percentages, like gold, how much, silver, how many companies are in the silver space?
Yeah, I mean, you probably see about half of the companies in the gold sector, if not pretty close. And, a lot of polymetallics, right? Or like copper, gold, silver, gold, a lot of companies in that, a few pure silver plays, a few pure copper plays, but probably 40%, maybe nearly 50 gold. And the balance would be, copper and silver leading the way, uranium shortly after that. And then, there's a handful of like antimony. There is at least one helium company, and a few lithium companies for sure. I think 4 or 5 at this year's event, a couple cobalt companies. You'll see a variety of vanadium. I think we've got a manganese company in there. And so investors who are looking for those obscure energy metals as the way to play that, there's those opportunities for sure. Yeah.
Antimony is another one that attracts US dollars. So that's why. No, fantastic, Jay. Like I'm really looking forward to attending the conference. Any last advice you have potentially for first-time attendees of the conference?
Yeah, here's what I'd say. We have amazing partners at this conference. And as a result, this event is 100% sponsorship supported. That means that general admission to this event, to all 5 of the stages, to the exhibit hall with over 200 companies in it, is 100% free. You do have to pre-register. You can't just show up, go to vricmedia.com to register. But due to our phenomenal partnerships, the event is free. General admission is free. And that does get you access to everything, 2 days straight of content streamed all day, both days on 5 different stages. It's a ton of stuff. Big picture conversations in the main speaker hall. That's where you'll find a lot of our geopolitical and macro talks. And then we've got workshops going hard into capital allocation. How do we actually put cash to work in this industry? And if you're a super keener and you want to come and have a drink with Kai, you want to meet Colonel Douglas McGregor, Dr. Pippa Malmgren, Rick Rule, Grant Williams, Frank Drewster, you name it, then get yourself a VIP ticket because some people want to do that. They want the full immersion. and the VIP ticket gets you a front row seat in the speaker hall. We take care of all your lunches. We host you for breakfast and lunch at the conference each day, but you also get a ticket to the most coveted events, which is the keynote speakers cocktail party at D6 Lounge at Park Casino on Sunday night. So you want to meet Robert Kiyosaki, Rich Dad, Poor Dad, any of these individuals, David Rosenberg, Danielle DiMartino Booth, and dozens more. We fly in about just nearly 100 keynote speakers to this conference. Andy Scheckman, the list goes on. Anyways, tons of fun. VIP ticket gets you access to the party with all those individuals. So come spill some wine at D6 Lounge if you're into that. Otherwise, general admission, as mentioned, partnership supported, 100% free.
Phenomenal. No, phenomenal roster of speakers, Jay. I'm happy to be among them. I'm more towards the bottom, though, but that's fine. No, I absolutely love it. And maybe one last question, bit of an unfair one, but what's your favorite panel that you're looking forward to? Do you have a favorite one?
Yeah. I mean, I guess I do. As I mentioned when we began, I'm so partial to the geopolitical subject matter. I just love it. I love... and we've got a handful of speakers this year that do a great job at looking at these complex conflicts, pulling them apart and analyzing what all the stakeholders' true incentives are. So you can look at a Syrian overthrow just a couple weeks ago, right? The Syrian government was overthrown. And within a week, we had 5 or 6 different countries on the ground. Russia was there, China was there, Iran was there, Turkey was there, United States was there. What did they all want out of that? Because they each wanted something different, right? Iran had a key trade route that they needed to protect. Russia had naval bases they needed to defend. China had oil investments, right? United States needs a stronghold in that region. Everyone's got a different incentive to be there, but we can very quickly get washed away with the headlines and miss what's underlying. And what I would tell you is that whether it's Ukraine, whatever conflict you're looking at, if you go deep enough into those incentives, what you will find is that it always comes down to the resources all the time. That's what we really end up battling over. And I think that argument carries through history incredibly well. We go to war over what's in the ground, unfortunately, right? I mean, in the end of the 19th century, there were the banana wars. The United States went to war over bananas in the Caribbean, in El Salvador, Cuba, Honduras, right? So people sometimes ask me, do you ever see in the future that we might go to war over copper or nickel? And it's like, man, we went to war over bananas. I sure hope not, right? I sure hope not. But countries will defend their access to the materials they need almost at all costs. You may not like that reality, but it is the reality. And so understanding that with the assistance of our geopolitical analysts, I find to be very useful. So we've got 2 or 3 big focuses on geopolitics. We open up the show on Sunday morning with the global geopolitical outlook. We've got some East versus West conversations going on, discussing trade and power and influence. That'll all be a ton of fun. I'm looking forward to all that.
Absolutely, yeah. The Sunday morning ones, I'll have to watch the recording, sadly, but it sounds fun. I'm really looking forward to it, and meeting some of the keynote speakers in person will be a blast, absolutely. So, Jay, thank you so much for your time. Thanks for putting on a phenomenal conference. Really appreciate it. Can't wait to meet everybody in Vancouver and getting the industry together and getting folks together. Yeah, that's it. VRICmedia.com. Go sign up, go register, and we'll see everybody there. Jay, thank you so much. I'll do a quick outro, and thank everybody for tuning in. I hope you enjoyed this conversation with Jay Martin. As I said, he's the host of the Jay Martin Show and a host of the Vancouver Resource Investment Conference. If you're in the area, or if you can make it, come out to Vancouver. It's worth your time. Phenomenal keynote speakers, really interesting companies to go look at, meet the CEOs, look them in the eye, ask your questions. Really important for your investment and your portfolio, in my opinion. So educate yourself, get educated, and have fun. Thank you so much for tuning in. Don't forget to like and subscribe. We'll be back with lots more here on Soar Financial. Thank you.